Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. So far, 6 problems we have completed on manufacturing concerns, financial statements of a manufacturer. Hope my regular viewers have already watched all the videos, got complete command and how to make the manufacturing account. Now I'm starting the next problem, that is problem number 7 and 8 in this video. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always keep ready the problem, take the screenshot of the solution of 7th and 8th problem, then I'll explain all the points in detail. Now, see the 7th problem. Problem number 7. The following information is extracted from the books of Mihai Manufacturing on 31st December 2016 at the end of the first year of business. The business accounting year ends on 31st December 2016. So end of the year raw material closing stock, because these stocks are given at the end of the year. So closing stock. So closing inventory of raw material 55,213, work in progress closing is 12,543, finished goods closing is 82,134. Then production cost, see here, when production cost is already given, we don't require the raw material and work in progress, already it is considered. After considering the closing stock of raw material, closing stock of WIP, we got the production cost 2,36,112. Purchase of finished goods 96,022. Mihai Manufacturing marks up its cost of sales by 50%. What does it mean? This Mihai Manufacturing is the business, and there is a policy in the business to get a profit of 50% on cost of sales. The profit is, gross profit is 50% of cost of sales. So first of all, we need to calculate what is the cost of sales. To cost of sales, we add we multiply 50%, we get the profit. Now, prepare the trading account for the year ended 31st December. First question. Second question, suggest one reason why manufacturing purchased finished goods. Why a manufacturing business will purchase finished goods? Normally finished goods will be produced by the manufacturer, but under certain circumstances the manufacturer will purchase the finished goods. So what are the circumstances in which the manufacturer will buy the finished goods? That is the second question. But first question, we have to find out, we have to prepare the trading or manufacturing account. Trading account will make. Now, Mihai Manufacturing and Trading Account for the year ended 31st December. So in trading account, first we take the revenue, sales revenue. But in the problem, sales revenue is not given. We have to find out. Okay, we'll calculate in working notes. From sales revenue, we deduct cost of sales. So sales revenue minus cost of sales, we will get the gross profit. That equation you remember. Always note it down. When I give the explanation, always make a note of it so that you can be able to remember. So sales revenue minus cost of sales, you'll get the gross profit. Now cost of sales. How to find out cost of sales? We have production cost. Production cost. Actually opening inventory of finished goods, but we don't have opening inventory of finished goods because it is the first year of ending. The business was started in the current year itself. So there is no opening inventory of finished goods. So we directly take production cost 2,36,112 given in the problem. To production cost we add purchase of finished goods. So purchase of finished goods we have added. Now deduct closing stock of finished goods, that is given in the problem. The closing stock of finished goods, how much? 82,134. So 82,134 subtract minus. So 332,134 minus 82,134, you will get 2,50,000. What is this 2,50,000? It is cost of sales. We got the cost of sales. Once we get to the cost of sales, easily we can find out the gross profit, which is given in the problem that gross profit is 50% of cost of sales. So here, Mihai Manufacturing marks up its cost of sales by 50%. So profit is 50% of cost of sales. So 50% of 2,50,000, it comes to 1,25,000. So we got the gross profit 1,25,000. So here gross profit 1,25,000. Here I am taking 1,25,000. Now with the help of this we can find out the sales revenue. So what is the formula for sales revenue? Cost of sales plus gross profit. How much is the cost of sales? 2,50,000. How much gross profit? 1,25,000. 2,50,000 plus 1,25,000. 3,75,000 is the sales revenue. So I am taking sales revenue as 3,75,000. We got it here. That's it. Simply it is asking you to prepare the trading account. This is the trading account. Sales revenue minus cost of sales will get the gross profit. Here are the working notes. That's it. A point we have completed. Now I am coming to the B point. Why a manufacturing company will purchase the finished goods? Actually, manufacturing company must produce the finished goods, but sometimes they purchase it. So what are the circumstances? First, to meet an urgent order. Sometimes a customer requires the finished goods urgently, but to make ourselves it will take some time. So it is better to buy the finished goods and sell it to the customer. In that case, there is no need to produce, we buy the finished goods. Secondly, machinery breakdown. Sometimes, all of a sudden there is a breakdown of machinery. Our production is stopped. We cannot be able to deliver the goods on time to the customer. We buy the finished goods. So breaking down of machinery leads to purchasing the finished goods. Third, delay in production. Sometimes, due to a number of reasons, the production may be delayed. When production is delayed, we cannot be able to deliver the goods on time to customers. We have to buy it from outside. So we'll buy the finished goods and sell it to the customer. That is the reason. Second, cheaper to purchase than produce. Sometimes, some of the items will become more costlier to produce, whereas it is cheaper to buy it from outside. So if the finished goods are cheaply available in the market, we buy it from outside and sell it to the customer. So these are few circumstances in which a manufacturer will buy the finished goods, purchase the finished goods. That's it. Next, problem number 8. See carefully. Sohal, a manufacturer of footwear, again a manufacturing business, provided the following information for the year ended 31st March 2016. 1/4/2015 is the beginning of the year and 31st March 2016 is the end of the year. So opening and closing inventories are given. Inventory of raw material, inventory of work in progress, inventory of finished goods, opening as well as closing. A question. Explain the difference between each of these types of stocks. Stock means inventory. We have different types of inventory. Inventory of raw material, inventory of work in progress, inventory of finished goods. What are the differences between these three types of inventories? We have to give the explanation. I am giving the explanation right now. Second, in addition, the following information was provided for the year ended 31st March 2016. Some information is given. And last, B point, prepare the manufacturing account for the year ended 31st March 2016. So two questions are asked. The first question is asking you to explain the differences between different types of inventories. Second question, it is asking you to make the manufacturing account. The first question, what are the differences between the three types of inventories? See carefully. First of all, the inventory of raw material is that inventory, that stock, that is crude material or unprocessed material The material which is purchased but not yet work started. That crude material or unprocessed material on which work was not yet started. The material is lying in the stores, in the godown. That is called inventory of raw material. So raw material stock is the stock of crude or unprocessed material that can be converted, manufactured into saleable goods afterwards. Work in progress inventory. Work in progress means semi-finished goods, partly completed, partly not completed. That means those material on which manufacturing process was started, but it is not in a saleable condition. Still work is going on. So work in progress are goods which have started their manufacturing process, so as no longer included in the raw material. The work is started already on that material. So material cannot be included in inventory of raw material. That has left the stock of raw material and but have not yet reached a stage where they are fit to be sold. But this material is not yet completed so that it can be sold to the customers. It is not yet finished. That is called work in progress. Lastly, inventory of finished goods are those goods on which the manufacturing process is 100% completed and the goods are ready to be sold. It is in a saleable condition. That is called inventory of finished goods. So finished goods stock are the goods which have completed the manufacturing process and are available to be sold. So I have explained you all the three types of inventories. Now it is asking you to make the manufacturing account. So opening, three stocks are given: raw material stock, work in progress stock and finished goods stock. Remember, opening and closing finished stock will not be taken in manufacturing account. The finished goods inventory, opening, closing will go to income statement. Whereas raw material and work in progress, opening and closing will be taken in manufacturing account. Now, in addition, the following information was provided: purchase of raw material, direct wages, salary of factory supervisor. Salary of factory supervisor is factory indirect cost. Two direct costs are there: material consumed and direct wages. If direct expenses are there, that will also be included. But normally we are having only two: material consumed and direct wages. So purchase of raw material will be taken under material consumed. Direct wages will be taken under prime cost. So after calculating prime cost, we have to take indirect factory expenses, that is overheads. So salary of factory supervisor, overhead. Carriage on raw material, this is carriage inward. Carriage on raw material will be added to purchase of raw material. Note it down. Carriage on raw material should be added to purchase of raw material. And sales and administration cost, it will not come in manufacturing account. This sales and administration cost will be taken in income statement. So write down there itself, make a note of it. If in examination this item appears, just ignore and write a note that sales and administration cost will go to income statement, not in manufacturing account. Depreciation of factory machinery, this will be taken under factory indirect expense. Rent, power and insurance will take it under factory expenses. The cost of rent, power and insurance are apportioned 60% to the factory and 40% to the office. That means these three expenses should be bifurcated: 60%, 40%. 60% should be taken under factory indirect expenses. Remaining 40% will go to income statement, office. But we are not making income statement, we are making only manufacturing account. So only 60% we will take. Then prepare the manufacturing account for the year ended. That's all. This is the problem. Now see carefully the solution of this problem. Manufacturing account for the year ended 31st March 2016. Two columns at the extreme right hand side, dollar. First we calculate raw material consumed. Opening inventory, opening stock of raw material 3600 given in the problem. To opening inventory, add purchase of raw material 3,96,600. To that, add carriage inward or carriage on raw material 9,800. Add up the three, 4,04,000 is the total, minus closing inventory of raw material that is given. Closing stock of raw material is 4,000. Subtract. We'll get 4 lakh rupees is the prime, material consumed. Raw material consumed is 4 lakh. To this we add direct wages. The direct wages are given 1,10,000. To total 4 lakh plus 1,10,000, 5,10,000 is the prime cost, direct cost. To this we add indirect factory cost, indirect factory expenses over it. What is the first one? Factory supervisor salary 45,000 directly have taken. Second, depreciation, factory machinery depreciation 33,000 fully I have taken. Next one, rent. Rent, power and insurance. It is saying that 60% belongs to factory. So only 60% will take. In the problem it is given rent 30,000. 30,000 into 60 by 100. You will get 18,000. Rent. In the problem rent is given 5,000. 5,000 into 60 by 100. 3,000. Insurance. Insurance is given 8,000. 8,000 into 60 by 100. You will get 4,800. That's all. Now you add up factory indirect cost. The total of factory indirect cost is 103,800. To this, we add opening inventory of work in progress, WIP. The beginning of the year, WIP, opening stock is 5,800, add up. Opening inventory, add up. 109,600. Subtract closing inventory of WIP, that is 6,100. Deduct, you will get 103,500. This is the total of indirect factory expenses. Now, prime cost plus indirect factory expenses, you will get the production cost. So, 5,10,000 plus 103,500, 613,500. This is the production cost. That's all. So, this is the end of problem number 8. So, in this video, I have completed 2 problems, 7th and 8th. Inshallah, we will continue the next problem in the next video.